July 30th. This follows a 100 billion naira offer in June that drew strong demand, particularly for the 7-year bond, which saw 561 billion naira in bids, but only 98.95 billion naira allotted. The 5-year bond had more limited uptake, with 1.05 billion naira allotted from 41.7 billion naira in bids. The reduced July offer suggests the government is managing borrowing more carefully amid inflation and high debt costs. It also indicates a strategy to sustain confidence without over-saturating the market. Subsequent subscriptions start from 5,000 naira with interest paid semi-annually and full repayment at maturity. The bonds are part of Nigeria's strategy to raise domestic capital for budget funding and infrastructure, offering stable return to investors. And moving on, the chairman of the Senate Committee on Local Content, Senator Joel Onowakbo Thomas, has demanded full compliance with Nigeria's local content laws across both the oil and gas and non-oil sectors, warning that defaulters will face strict sanctions. This underscores the critical importance of these regulations for national economic development and indigenous participation in key industries. The committee is currently reviewing several complaints from local operators alleging poor adherence to the Nigerian Oil and Gas Industry Content Development (NOGIC) Act of 2010. Presidential Executive Order No. 5 of 2018 and the Nigerian Force Policy 2025. Such non-compliance undermines effort to build local capacity and retain economic value within the country. Many petitions detailed failures in contract award, project execution, human capital development, and technology transfer, areas crucial to Nigeria's quest for industrial growth and self-reliance. A comprehensive review is on the way for all existing waivers, content plans, and compliance frameworks aimed at strengthening enforcement and delivering unintended national benefits. And away from that, the House of Representatives Committee on Petroleum Resources Downstream has resolved to investigate the turnaround mounting TAM of the nation's 4 state-owned refineries. The committee also announced plans to probe bureaucratic bottlenecks hindering local and modular refineries from accessing crude oil. This inquiry, aims to address long-standing issues affecting the country's refinery capacity and fuel supply. This resolution follows a similar move by the House Committee on Petroleum Resources midstream days earlier. The committee also pledged to uncover why, despite a $10 billion investment in TAM, the refineries are not functioning optimally. This reflects a concerted legislative efforts to bring accountability to this crucial sector. Chairman of the committee, Ikenga Ugochikinyere, expressed concern over the reported shutdown of the Port Harcourt and Warri refineries only weeks after resuming production. This intermittent operation raises questions about maintenance, effectiveness, and overall refinery management. The probes seek to identify root causes and propose solutions for reliable domestic refining. And in the power sector, energy commissioners from Nigeria's 36 states expressed readiness on Wednesday to meet the power distributors to negotiate electricity tariffs. Their goal is to establish rates that are cost-reflective but not burdensome for residents, aiming for balanced pricing. This initiative follows recent tariff adjustment. This move comes after the Enugu Electricity Regulatory Commission, EERC, recently reduced electricity tariffs for Band A customers from 209 naira per kilowatt hour to 160 naira. The decision met strong resistance from both generation and distribution companies, highlighting the contentious nature of tariff settling in Nigeria's decentralized power sector. However, distribution companies have firmly opposed any state-level negotiations on tariffs. They argue that such involvement may threaten the financial viability on the sector. Meanwhile, the EERC continues to defend its decision as states assert their right to influence power regulation within their jurisdictions. And now, Kwara State Governor Abdulrazak has launched the domestication of the National Women's Economic Empowerment (WE) policy. He described this as another major step towards expanding opportunities for women, reinforcing the state's commitment to gender equality and inclusive development. The governor noted that this initiative would help dismantle systemic barriers women face, particularly in accessing public contracts and leadership roles. The public aims to level the playing field and boost women's participation in economic and governance spaces. Kwara is now the fourth state in north-central Nigeria to domesticate this national policy. Governor Abdulrazak had previously set a national benchmark with the Gender Composition Bill mandating at least 35% female representation in appointive positions. His cabinet currently includes over 56% women, reflecting a strong push for female empowerment. And now we'll take a break. We'll be returning with more stories on the World News today. Please stay with us. Glad to know you never left. Down to more stories. In Angola, the National Oil and Gas Agency, ANPG, announced a boost of 60,000 barrels per day in oil production. This is part of an effort to stabilize declining output, which has dropped sharply due to maturing fields. Once producing nearly 2 million barrels per day in 2008, Angola's output has halved, prompting reforms to reverse the trend. The country recently overhauled its oil and gas regulations to attract investors and approved a new law offering incentives for offshore production. These efforts gained urgency after Angola exited OPEC following a dispute over output quotas. And now, globally, South Korea's economy expanded by 0.5% in second quarter, driven by strong semiconductor exports, which grew 4.2%, the biggest gain in nearly 5 years. This exceeded projections and was boosted by strong private consumption. However, the central bank warned of risk from U.S. tariffs. So far, Seoul has not reached an agreement with Donald Trump's administration to ease the threatened 25% levy on Korean goods, raising concerns for exporters. And away from that, we'll go to Europe. EU member states on Thursday approved a £93 billion package of counter tariffs on the U.S. goods. These measures will take effect August 7 if trade talks fail. This follows a threat by President Donald Trump to impose a 30% levy on EU goods unless a deal is reached by August 1. The EU's tariff plan includes existing levels on 21 billion of U.S. goods and a second list worth of £72 billion, covering planes, cars, and whiskey. Hungary was the only country to abstain. The bloc signals it's ready for a robust response. And now the U.S. President Donald Trump will head to Scotland on Friday, combining diplomacy and golf. He is expected to meet UK Prime Minister Keir Starmer, with trade relations topping the agenda. The US and UK signed a trade deal in May, but Trump has signaled a desire to renegotiate. London is watching closely for possible changes to the agreement, especially as the UK has so far avoided Trump's broader tariff regimes. And now, in a major trade development, UK Prime Minister Souq Starmer and Indian Prime Minister Narendra Modi have signed a free trade agreement lowering tariffs on cars, whiskey, textile, and jewelry. The deal took 3 years to finalize and is expected to significantly boost bilateral exports. The agreement also includes a pact to address illegal migration. Critics have raised concerns over social security terms, but UK Business Secretary Jonathan Reynolds clarified that Indian workers on secondment will receive standard terms. Starmer called it the most significant trade deal since Brexit. And now we'll take a break. We'll be returning with a story from Australia, and we'll be right back. My name is Grace Komalafe.
Welcome to Femi Walsh Limited, owners of Souq TV Lagos, Our Radio Lagos, Kaswa Radio Kano, and of course, Emirates TV Abuja and Dubai. Our niche market for media is business, economy, and development. At Femi Walsh, we promote your company's products and services using our world-class facilities. From Our Radio to Souq TV, what you get is nothing but the best of the very best.
And if you're looking for the premium production firm for your events and corporate coverage, think no further, because we offer you the best of industry stuff.
With high-definition cameras ranging from 4K to 8K multicam setups, high-directional microphones, and real-time streaming encoders, we give you a production like none other. And if you're looking to produce podcasts, adverts, and documentaries, our team of experts will ensure that you convey your message clearly and professionally. Femi Walsh, Global Vision, Local Impact.
Thank you for staying with us, and now we'll take the rest of the news. Australia will lift its 2-decade-old ban on US beef imports, a move that follows strict biosecurity reviews. The ban was imposed after the 2003 mad cow outbreak. The White House welcomed the decision, calling it a major trade breakthrough. Austria emphasizes the change was due to scientific reviews, not political pressure, not an improvement in U.S. beef safety protocols. And now in sports, Nigeria's the Tigress, 6-time AfroBasket champions, have arrived in Abidjan ahead of the 2025 FIBA Africa Championship, running July 26 to August 3. They are grouped with Mozambique and Rwanda in Group D. The team is aiming for a 5-peat, having won consecutively since 2017. Their legacy began in 2003, and they remain Africa's top women's basketball team. International Barcelona has cancelled Sunday's friendly with Vissel Kobe in Tokyo, citing serious contractual breaches by the promoter, initially named as Yeshuda Group. The second leg in South Korea is also at risk. Barcelona, who won their 28th La Liga title last season, is still scheduled to play FC Seoul and Daejeon on July 31 and August 4, respectively. The situation highlights the risk of poorly managed international tours. Many thanks for watching. That's the news this afternoon. We'll say you follow us on all our social media platforms at SouqNews Television. My name is Grace Komalafe. Do have a good afternoon.